Boy, oh boy, you guys, Snapchat has fallen quite a bit. So, if you're looking at the stock price right now, it is at 16.35 at close, but in the after hours, it is $11.97. So, it has fallen by 26.79%. That is a crash. So, what actually happened here? We're going to have to actually look at the earnings. So right now we're looking at Q2 2022 financial results. Daily active users increased 18% year over year to 347 million. Okay, that's good. Revenue increased 13% year over year to 1.11 million. Hey, you know what? That's decent. Could be better. Operating cash flow was negative 124 million and free cash flow was negative 147 million. Okay, well, what are we comparing that to? So notice that they don't really tell us that, what we're comparing to. So what I want to look at is, I actually want to look at the last quarter. So here I have Q1 pulled up. Q1 operating cash flow was 127 million and free cash flow was 106 million. So, we can see a significant drop. In Q1, we were positive. Now, Q2, we're negative. So, yeah, this fell quite a bit. And you guys have to remember that Snapchat is a tiny, tiny company. I mean, it's still bigger than most companies, but compared to Facebook and Google, they are tiny. So, they have different worries. So, if we're looking at Facebook and Google, their worry is that, oh, you know what? We're super big. We're making so much money, but oh, are we so big that we can't grow anymore? That's their worry. Snapchat is more like, hey, you know what? We need to catch up to all of these guys. We need to make more money so that we could invest in our technology, this and that. So, when they're not making money and their free cash flow is negative, it's not a good thing. It hurts them a lot more. And this daily active user, even though that's growing, I mean, if they can't monetize it and they can't make the money from this, it doesn't look as good. Keep in mind that Google and Facebook actually have positive earnings. Their earnings are not negative. Their cash flows are positive as well. So, when we're looking at Snapchat like this, we can't really compare as much with something like Google or Facebook, who are actually cash flow positive, who are actually making a ton of money, and whose worries are kind of different. So let's take a look at this. So here in this investor report, they say that they're going to do a stock repurchase program of up to 500 million of their Class A stock. Now, they say the goal of this program is to utilize the company's strong balance sheet. We're going to take a look at that. Is that really strong? To offset a portion of the dilution related to the issuance of restricted stock units to employees as part of the overall compensation program. So basically, they're doing dilution through stock-based compensation. So this stock repurchasing program is really just to offset that. So I wouldn't really see this as crazy bullish. They're not like Apple, who's constantly buying their stock back and who's constantly reducing their shares outstanding. This is just to maintain that level. So now they're saying repurchases under the program will be funded from existing cash and cash equivalents. So I mean, that's a relief right there. So now let's scroll down a little bit. Q2 2022 financial summary. Net loss was 422 million compared to 152 million in the prior year. So we could see that basically they almost doubled their losses from, or almost tripled. Yeah, it's almost triple. Dang. So yeah, they almost tripled their losses. That's pretty bad. If we're looking at the operating loss right here, they basically doubled it. If we're looking at revenue, it increased by 13%. Adjusted EBITDA. So adjusted EBITDA was 117,403. Keep in mind that this number is in the thousands, and we reported 7,190. So this is literally like what is that? Like 6% of that. So, it's fallen quite a bit, the adjusted EBITDA. Now, if we're looking at that free cash flow, you know, we're comparing one year to the next. Now, here in the last year's quarter, it was negative 115,709. And here in this quarter, it's negative 157,451. Keep in mind what I just showed you guys earlier. In the last quarter, they were actually positive. So they went positive to negative. Pretty hard here too. So let's just scroll down a little bit more. Now, I think what they're doing is actually pretty cool. So they're investing a lot in their augmented reality platform. So, they're partnering up with all these fancy brands. So here, let's go ahead and read one of these. We released Dress Up, the newest AR destination on Snapchat where users can discover and browse personalized AR fashion and try on experiences from creators, retailers, and fashion brands like Dior, Gucci, and Louis Vuitton. Now they say we added AR shopping to our camera kit offering, allowing businesses like Puma to integrate try-on lenses into their own mobile applications. So now they're partnering with other companies like let's see, like Tiffany's and Balenciaga and Versace. Now, if we're looking at financial guidance, right here they say, given uncertainties related to the operating environment, we are not providing our expectations for revenue or adjusted EBITDA for the third quarter of 2022. So that's pretty bad. They don't even know where their company is going. So here in the last quarter, they actually did give us guidance. So let's take a look at that. Scrolling down, 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 down. Okay, so right here, Q2 2022 outlook. Revenue growth year over year is estimated to be between 20% and 25%. So they missed on that. So that's also another key thing that we need to look at. They reported 13% revenue growth when they were expecting 20% to 25%. So that's just another bad thing. Adjusted EBITDA is estimated to be between break even and 50 million. So they were actually within this expectation. We got about 7 million, if I recall. So this was actually correct. Revenue growth, they missed. Now let's scroll down a little bit. So if we're looking at the consolidated statement of operations, let's take a look at their diluted shares. So we can clearly see that from the last year's quarter to this quarter, this number's actually gone up a little bit. So we could go ahead and calculate that. So let's do 1,632,140, and then we're going to subtract that from 1,547,234. Now that gives us 84,906, and what we're going to do is we're going to divide that from the base year, which is the 2021 quarter, and that is 1,547,234. So that is about a 5.5% increase in the shares diluted. Now let's go ahead and check our math. So we could do 1,547,234, multiply that by 1.055. And that gives us roughly that number. So here we could see that this number has actually increased by about 5.5%. Now, they did mention that they have a strong balance sheet and that they're going to use their existing cash position to do these buybacks. And that buyback was up to 500 million. So let's take a look at their assets. So if we're looking at cash and cash equivalents, well then this is in thousands except par value. So right here they have about 2,298 million in cash. If we're looking at marketable securities, that is 2,574 million. Accounts receivable, that's about 1 billion. So if we're looking at total current assets, that's about 6 billion and 15 million. Now that's quite a bit if we're comparing it to our total current liabilities, which is only 1 billion and 63 million. So let's just go ahead and divide those two things so that we could actually get the ratio of current assets to current liabilities. So we could do 6, 0, 1, 5, 2, 3, 4. Divide that by 1, 0, 6, 1, 9, 6, 7. So it's about 5.66. That's actually pretty good. So I could see why they're saying their balance sheet is pretty strong. It's because they have so much current assets in relation to their current liabilities. So what this means is that, their current liabilities, which is basically representing 1 year, what they have to pay within a 1 year time frame, and their total current assets, which represents basically assets that are liquidable within a 1 year time period. So if we're looking at this, their balance sheet does look pretty strong, and they're not really going to be in any trouble anytime soon, just given how strong their balance sheet is. So that is exactly why they are using part of their balance sheet to repurchase those stocks. So now we can see that reconciliation of their free cash flow. So net cash from operating activities is negative 124,000, and their purchase of property and equipment is negative 23,337, or negative 23,370. So when we add those two together, or when we actually when we add those two together, it comes up with a negative free cash flow of 147,451. So that's how this is calculated right there. And then here's their adjusted EBITDA reconciliation. So they're just getting net loss. I was going to say net income, but they actually lost money, so it's a net loss. So they're getting net loss, and then they're adding or deducting interest income, expenses, interest expense, other income, depreciation, amortization, stock-based compensation, and all of that stuff. So that's basically it for their earnings statement. Now let's take a look at the charts. Whew, boy. So let's zoom out. So right here, this was actually looking pretty damn bullish. We're slightly getting above the 50-day moving average, and we've been underneath this thing for such a long time. And now we're at 1197. So we're way down here. So let's just zoom out. So we do have the support that shows up right around 1188, as you guys can see right there. Now, if we fall below that, oh boy, this just looks so bad if we fall below that. Look how much I have to zoom out. I have to go on the 5-year time frame. So yeah, that support is basically this line right here, $7.89. Ooh boy, that's really bad. Now we have been in this downtrend channel for quite a bit. I can't believe this actually used to trade for $83. So now we're all the way down here. So if we do fall, maybe we could produce a bounce off of this support right here, or maybe we could fall lower, to the bottom of this trend channel, or maybe we just go sideways for a little bit, or maybe we actually rally, maybe we oversold. So who knows what's going to happen, I do think these earnings were kind of bad, but you know what? Like they said, they have a strong balance sheet, so they do have some time to recoup all of this and kind of get their shit together. But overall, we did see those numbers go up. So the numbers that we did see go up, let's go back here. So just to recap, we did see daily active users, they increased. Revenue, it increased, just not as much as we were hoping. And operating cash flow was negative. And overall, net income, negative. EBITDA, slightly positive. So, yeah, that's basically Snap earnings for you and their chart. Now, let's take a look at the collateral damage. So let's look at Meta. Meta actually fell about 4.7%. Now, let's just take a look at the 5-year time frame. So where could we possibly close on the week? Well, we do have this longer term trend line, as you guys can see. So if I zoom out here, you can see this caught this fall right there, this fall right there, that fall it's kind of messing with this fall right here. So, ultimately where we close on this week could potentially be right around this trend line right here. So if we're just looking at this trend line, it could possibly be right around 177 maybe is kind of where we could end the week. That's just my thoughts. We are constantly trying to get back to that trend line, as you guys can see. So, every now and then, we're messing around. We were kind of in this falling wedge. We broke out of this falling wedge, and yeah, we ever so slightly broke above this support trend line. So that it was looking good, but I mean, we still have to see. Does this recover some of its losses? Does it just go right back to 183? We'll see. I mean, we're not even sure about the overall markets right now. So that's basically what Meta is doing. Now, Google also took a little bit of a hit, 2.57% down. Now, Google is a little bit more complicated on the TA side. We do have this support trend line right here. It caught this massive bounce right there. Also caught this massive bounce. We do have this resistance line right there. And, we have been breaking around, chopping, finding this as support, as you guys can see right here. And then now we have this resistance line right here. So rejection right there, and right there. So, we could still try and come back up, retest this. And then if we do break past this, we do have another line of resistance right here that's connecting these tops right here. So that top, that top, that top, that top, do we top out again right here? And if we do, that will line up again with the 100-day moving average, which is right around 122.11. So that's basically it for Google, and that's basically wraps up this video. I hope you guys enjoyed. Have a great one.